Now, I've made a few videos about this daily SPX weekly Iron Condor option strategy. That's a mouthful. And all the results in these previous videos were based on backtesting outcomes. I mainly do backtesting because I want to gain confidence that the option strategy could be profitable in the future. Now, we know past results do not guarantee future success. But for me, it's a way to test the strategy and analyze the results to make a decision whether to go live with it or not. The 2021 results so far look promising, so let me just start out the video with a quick rundown on how the strategy works, and then I'm going to follow it with the actual results from my first live trade utilizing the strategy. Hey, this is Rochelle and welcome to Multiple Passive Streams of Income. Now, the daily SPX option trade strategy enters into trades on the day of expiration of weekly SPX options. Now, these days of expiration happen on Mondays, Wednesdays, and Fridays with a few exceptions. Trades last one day when they do happen. So when I say daily SPX weekly Iron Condor options, daily does not mean that this trade occurs every day. It just means that when we enter the trade, we're going to be in it all day. Okay, it is going to be entered in at the beginning of the trading day, which is around 9:30 a.m. And then it's going to expire at the end of the day at 16:30, which is 4:30 p.m. Eastern Standard Time. And again, that's going to happen on Mondays, Wednesdays, and Fridays with a few exceptions. Now, there is a CBOE calendar you can look at to see what days the weekly SPX does or does not trade. Most times, trades do not happen on the third Friday of the month, and when holidays fall on Mondays, Wednesdays, or Fridays, or if a longer timed SPX option like a quarterly option expires on the same day as the SPX weekly, that's when those exceptions occur. The link for the calendar is in the description below. The daily SPX weekly strategy is an Iron Condor trade, which entails buying and selling a call and buying and selling a put. Now, both sides of the trade will create credit spreads, which means we will receive money when we execute the trade. Now, don't get flustered by the complexity of the trade because trading software makes the trade easy to execute and everything is done simultaneously. Our job is to determine our call and our put entries, which is easy to do because the delta of each strike price will give us those entries. And all we have to do is find the 10 or less delta on both the call and the put sides to determine the strike prices for entry. And because we're selecting 10 or less delta strike prices, we know that the trade has a 90+% probability of winning. Now, on the call side, we are going to identify the strike price at 10 or less delta. We will sell that strike price and buy the strike price 2 strike prices above that strike price. Conversely, on the put side, we're going to identify the strike price at 10 or less delta. And just keep in mind, when you're looking at deltas on the put side, the deltas will show up as negative numbers, but it's the same premise. We will sell that strike price when we find that strike price with 10 or less delta, and then we'll buy the strike price 2 strike prices below the strike price. So that's going to cause 4 simultaneous trades, and that's what creates the Iron Condor, which we will determine the amount we'll probably gain from the trade because it has a 90+% probability of winning. And the 4 simultaneous trades will also determine the maximum loss that we could lose with this trade because it does have a 10 or less probability of losing. Now, it's easy to calculate the maximum loss of a trade like this. All we have to do is subtract the amount of the credit spread from the iron condor, and we'll subtract that from 1,000, and we'll times it by the number of contracts that we are executing in a trade. And the software does it for us, but I just wanted to let you know that it is an easy calculation. So now I've been back testing this trade from January 1st of this year to see if the results would be promising, and they have been. So I decided I would start trading this live once a loss occurred, and that loss happened on Wednesday, December 1st. So the next trading day was Friday, December 3rd. So let's look at that trade. I'm only trading one contract per trade, although when I was back testing the strategy, I was doing it with a 4-contract trade. Now, I used the THINKORSWIM mobile app to execute the trade, and this was my first time using this, so it took me a while to figure it out. And because it's an iron condor trade, it was a little bit more complicated. I'll make a separate video soon about how to do this. But as far as today, I looked at the price of SPX, and that was at 9:16 a.m. and the price was $4,577.10. On the options tab, I have the December 3rd weekly chain open to display the strike prices of the SPX weekly option chain. And again, this option chain expires the same day, which is December 3rd when I executed the trade. Now, while I waited for the market to open, I'm trying to locate the call strike price that has 10 or less delta. When the market opened at 9:30 a.m., I located the 46.45 call strike price as having the 10 or less delta, and it was represented as 0.0850 on the screen. Now, because this was my first trade on THINKORSWIM, my screen was not completely set up correctly to do an iron condor trade. So to properly set this up, you should tap spread single and change that to iron condor. Also tap strikes and change it to all. To see these parameters, you have to be on the trade tab. If this is your first time trading this instrument, you'll have to put the ticker symbol in the search field to find the instrument, or you can tap on the instrument's option chain if it appears under recently viewed. Lastly, if you need to add any columns or delete any columns, you'll tap on the gear icon, and you can do that by tapping on the gear icon. Now on the screen is a screenshot of the proper settings. So we have spread as iron condor, we have strikes as all, and I use the gear icon to add the ask and the bid columns to my matrix here. And to see the bid columns, you have to drag the call and put sides to the left to see all of the columns. Also notice, because the spread is now iron condor, 4 strike prices appear in the strike column. Also note that if you do not see any fields highlighted when you are looking at your options chain, you have to scroll to the top of the option chain to make those fields appear. As you can see, I struggled figuring this out because it took me until 10:12 to get the trade ready, which was to sell 1 contract of the 46.20 call and buy the 46.30 call. And that's 2 strike prices above 46.20. Now, the reason why I bought 46.20 is because by the time I got the trade set up, that was the strike price for the 10 or less delta on the call side. And then I proceeded to find the 10 or less delta on the put side, and that turned out to be me selling the 44.70 put, and then I bought the 44.60 put, which is 2 strike prices below 44.70. Now, when you're looking at the 4 strike prices in the strike column, you probably are not going to see that combination. So what you have to do is choose the one that's the closest strike price to one of your entries. Another screen will open that will allow you to adjust the strike prices of each leg. Now, I'm not certain if I chose sell on the sell by toggle, but I believe choosing buy would give me a different result. I'll pay more attention when I execute more trades in the future. But notice that there's $140 in parentheses, which means we will get $140 upon executing the trade. And then the next thing you want to do is tap review. So now the prices will be changing as you're editing this Iron Condor. So even though it showed me 140 in parentheses, when I tapped review and went over to the order confirmation screen, you'll notice that the max profit is 145 and the max loss is 855. Remember, we can simply calculate this, right? Once we know that 145 is the max profit, we just subtract that from 1,000. And that's how we get the max loss of 855. And of course, if you're trading more than one contract, then you'll times that by the number of contracts that you're trading. But we're only trading one contract, so the max loss could be $855. Now, the last portion of this order confirmation screen shows you the fees that this trade will incur. So it was $4.96, so that makes a net profit of $140.04. After you confirm your trade, just tap send if it all looks good, and you'll see an order confirmation message confirming the trade. Now let's look at the SPX price chart and see how this Iron Condor looks visually. The purple lines show the approximate call and put strike prices. If the price stays within the inner strike prices, the trade expires worthless and we receive the maximum profit. And there is no loss in that case. If the price falls in between either of the 2 strike prices, we will incur a partial loss. And lastly, if the price falls above or below the outermost strike prices, we will incur the maximum loss. Also note, if the maximum loss is reached on either side, the entire trade closes, so you cannot incur 2 maximum losses in the same trade. At 9:30, the SPX opened at approximately 4,598.31, and all day the price never exceeded the inner strike prices, so we received the maximum profit from this trade, and all the contracts expired worthless. Now, you may be saying, hey, I don't like to risk $845 to gain $145. And I totally agree with that assessment, but don't lose sight of the 90+% probability win rate of the trade. That's the key when this trade is executed over time. If you decide you want to backtest this strategy also, I use Option View, OPTIONVUE, for backtesting. And if you decide to do it live, I'm using TD Ameritrade's THINKORSWIM to execute the trades. Now, when you're opening and getting option approved with THINKORSWIM, it is quite a process. So definitely give yourself a few weeks to get your account ready if you choose to start trading options. You will have to complete the regular KYC stuff like you do when you open a bank account. So you're going to have to upload some identification and they're going to have to verify your identity. Then there's a process to qualify yourself to be able to trade options. And that's a process of filling out a PDF full of questions and uploading it back to their support. And that can take a few days to get approved. Remember, when answering questions to become qualified to trade options, you want to always show you have experience and knowledge of options. If you tell them you're a beginner, they may restrict your account, which will make it impossible to do the more advanced option trades like iron condors. So when you're filling out these questionnaires, tell them you have years of experience and knowledge. And then the last part is adding funds to your THINKORSWIM account. And this entails you linking a bank account, and they're going to send a small amount to that bank account. And then you're going to have to verify that small account a day or two later with THINKORSWIM. So that process could take a few days. So just be prepared to spend a couple of weeks going through the processes to be able to trade live when the time comes. Unfortunately, Robinhood does not have the ability to trade SPX weeklies yet. So currently that's not an option for this trade strategy. So I'm off to a good start. Let's see how the trades pan out in the months to come. Please subscribe and hit the notification bell after you subscribe so you're notified as I continue to document the results of this option strategy. Please also like or dislike because all interaction counts. And as always, thanks for your time, as I know you could be any other place right now. Take care.